Good day, ladies and gentlemen. Welcome to my practical financial accounting lesson. Here we deal with our lesson using case studies. My name is Dunzo Onwordi. My email address is on the screen. If you need to communicate to me regarding this lesson, please do so using that email, quoting reference PFA 200207. I'll be dealing with cash flow statement. This is one of the level 2 topic. I know we are still on level 1. I'm only going through this to kind of give you some material to work on and keep you busy, so you have a feel of the kind of stuff we'll be encountering in level 2. So on completion of this lesson, learners will understand how to prepare cash flow statement using the indirect method. I think I can include using the direct and indirect method. Have enough materials or figure to explain both. Okay. Then you understand the distinction between operating, investing, and financing activity. How to analyze the statement of cash flows when it's done, and then the usefulness of cash flow statement. I'll be giving you a few here. They are not exhaustive. You have to do some research, go through other materials to get more usefulness of cash flow for yourself. Okay? So, what is a cash flow statement? Basically, and this statement is to do with cash. It hovers around cash. You can see. So, cash flow statement is a financial statement that shows how the movement in the balance sheet and income accounts affect the cash and cash equivalents. We all know what cash is. And cash equivalents are those marketable security that you can call for on demand and you get your cash. All right, it doesn't take time to liquidate them. Those are cash equivalents. Okay, let's underline that. Okay, I'll make it bold as well. Very important. Okay. The objective of IAS 7, okay, requires the presentation of information about the historic changes in the cash and cash equivalent of an entity, okay, by means of a statement of cash flow, which classifies cash flows during the period according to operating, investing, and financing activity. So in IAS needs you to prepare a cash flow statement and grouping them under these headings. So it will be a bit good for management to know which management could be the operating manager is dealing with cash flow properly, could be the finance manager, it could be the investment manager. Everybody, we need to know who is doing work, which department is kind of managing our cash flow properly. So, methods of presentation. As I said, it could be the direct and indirect methods. Those are the major ones. And what does the direct method mean? Purely, it is to do with the operation level. Direct method takes account of pure cash transactions only. Cash transactions only. Okay. So, for this reason, you need to be in good control of your control accounts. How to prepare your control accounts, where you'll be able to prepare like things like purchase ledger control, sales ledger control, cost of goods sold control, creditors, and then like this receivable and payable control, so that you will be able to fish out the cash flowing through these accounts. This is what you need to do the direct method at the operating level side. The other two levels, that is the investing activity and financing activity, are similar for both methods. So there's no difference between how you deal with this cash flow statement under these two methods when it comes to investing and then financing activities. It's just the operating activity that you need to be very careful. With the direct method, it's a bit difficult, but very intuitive. All right, okay? But the indirect method, you have the liberty to use the income statement from the balance sheet, either pre or post interest and tax. So once you use this figure, then you have to work back, adjusting for non-cash flow items, things like depreciation, amortization, profit or loss on disposal, and other non-cash transactions. Again, you now need to adjust or take account of the movement in your working capital, like the receivable increase and decrease, the payable increase and decrease, the inventory, and be careful to know which one is applying cash and which one is bringing in cash, source of cash. Okay. Investing activity will deal with capital assets, activity of a capital nature, such as acquisition of assets, disposal of assets, okay, investing in long-term project for income. All this will be dealt with under this section, like bonds, certificate of stock, right? Now, the financing activity is the one that deals with issue of share and debentures, loans, repayment of the loan, payment of returns such as interest on loans, dividends on shares, okay, dividends on shares, okay, all these items will be dealt with under the financing activity section. What are the usefulness of cash flow statements? One is liquidity position. It helps you to know the liquidity position of the company, whether they are in good position to pay their salary or their obligation, like paying suppliers, paying dividend and interest. Cash flow statement will clarify this position. It also enhances prediction about the future. When is the money coming in, the timing, the amount, uncertainty surrounding your money, cash in and out. Cash flow statement will help with the prediction. Cash flow statement also help with the reconciliation of the differences between our net income, our net cash, provided by operating activity, which are of interest to employee, investors, and creditors. So these are few I've listed here. They are not exhaustive, as I said. Do more work and get more. There are loads of them. Right, case study 7, OSPAC Limited. This is the case study we're using to kind of explain cash flow statement. On the screen here is the statement of financial position, the balance sheet as at 31st December 2020 and 2019. This is the asset side. Okay. Under the asset we have cash, 2020 40,000, 2019 25,000. Receivable, 65,000 2020, 50,000 2019. Inventory, 6,000 2020, 90,000 2019. Equipment, 325,000 2020 and 250,000 2019. Accumulated depreciation on these assets were 90,000 2020 and 125,000 2019, giving us a total of 400,000 year 2020 and 290,000 year 2019. Here is liabilities, or let's head it liabilities. Okay, liabilities. So payable, 30,000 2020, 4,000 2019. Tax liability, 10,000 2020 and 15,000 2019. Bank loan, 20,000. None was taken 2019. Share capital, 65,000 2020, 50,000 2019 is ordinary share capital. Retained earnings, 275,000 2020 and 185,000 2019, giving us a total of 400,000 again for 2020 and 290,000 for 2019, balancing the same as the assets. So everything is okay here. You have to check your account. And when you are doing a cash flow statement, you will be given other information to do with income and revenue items. Sometimes it's given in a very decent format as we got it here, the comprehensive income statement, that's the profit and loss account. All right, so we lock it. Sales is 640,000. Cost of sale 320,000. Giving us a gross profit of 320,000. That's 50% of turnover. Operating expenses 135,000. Giving us operating income of 185,000. Interest payable 1,500, giving us a profit before tax 183,500. Tax payable 45,000, giving us a profit after tax 138,500. We have additional information. 1. Operating expenses are composed of depreciation 15,000, salaries 45,000, loss on disposal of equipment 10,000, other operating expenses 65,000 cash. Note 2. Equipment was purchased during the year for 140,000 cash. Note 3. Equipment was also sold during the year. The original cost was 6,000 and the accumulated depreciation was 45,000. Dividends were declared and paid during the year. The figure not given, you have to deduce or derive this from the information given to you. Very tricky, but you will have to do it. Okay. Right. From this scenario, you are required to prepare cash flow statement using the direct and indirect methods. Using the direct and indirect methods. Okay. As usual, I would recommend you start use the line-by-line approach. Okay, starting from the beginning and work your way down. The beginning be where the figures start flowing, like from here. Make sure you go through them. I would recommend I go through the notes. I always start from the additional information. From the additional information, I start opening the accounts, relevant account, I see, or through the figures to where they belong to if I don't have to open an account. And then go back to the financial position and start working through. I will use Excel to explain this, and I hope you all will be available next time. So subscribe if you haven't done so, and then please press the notification bell so you'll be alerted once I'm on board and to explain this particular lesson, apart from other lecture I'll be rolling through. And give us a thumbs up if you're happy with this lesson. And then I will see you next time. Until then, goodbye.